Yesterday, the euro managed to hit a new one-week low amid increased market volatility while the British pound remained range-bound. Demand for the US dollar was driven entirely by macroeconomic factors. Statistics from Germany were weak. German retail sales fell sharply in February, dragging the euro down in early trade. The European currency was also weighed down by the news that the US economy grew at a solid 3.4% annual pace from October through December, above the previous estimate of 3.2%. In addition, data on US home sales and the University of Michigan's benchmark Consumer Sentiment Index proved to be upbeat, which also supported the greenback. Meanwhile, the pound sterling remained relatively steady despite the Bank of England signaling interest rate cuts in the near future. However, if the euro and other risky assets continue to lose value against the dollar, the British pound will follow suit. Before we get into technical analysis, let's take a look at today's macroeconomic calendar. France is set to release a batch of statistics, including consumer price and household consumption. Preliminary figures indicate a dip in the annual inflation rate based on the consumer price index from 3% in February to 2.6% in March. Italy will also report data on inflation, which is expected to increase. The focus of market participants will be on US statistics. The core PCE price index, the Fed's preferred inflation gauge, is estimated to have risen by 0.3% month-on-month and 2.8% year-on-year in February. If the indicator climbs, these would spur demand for the dollar. A decline in the reading will erase the recent surge in inflation, as Powell stated. In addition, data on US personal income and spending is due out today. Traders may also take notice of speeches by San Francisco Fed President Mary Daly and Fed Chair Jerome Powell, who are expected to comment on today's statistics and future interest rates. Now let's move on to technical analysis. According to the 1-hour chart, the euro is trading downwards. A false breakout at 1.0763 will generate a buy signal. If the price breaks below this level, it's worth putting off long positions on the rebound until the price reaches 1.0735. In this case, one can account on an intraday correction of 25-30 pips. If bulls regain control of the market at 1.0763, the euro will have a chance to rise to 1.0795. If the price consolidates above this level and tested for the top down amid weak data from the United States, the European currency will most likely climb to 1.0826 and probably 1.0863. At the level of 1.0863, I recommend going short on the rebound to catch an intraday correction of 30-35 pips. Short positions will look more promising today can also be considered on a false breakout at 1.0795 or 0826. The level of 0763 can be seen as a target. If the price breaks through and fixes below this mark, amid a rise in the core PCE price index, the euro is expected to plunge to 0735 and even 0698. As for the British pound, is still trading in a sideways range. At the level of 1.2665 acting as strong resistance, traders are recommended to go short on the rebound in the hope of a 30-35 pip move. Short positions at 26.28 can be considered and opened amid a false breakout. In this case, sterling is likely to dip to 1.2588 level. Its breakout will open the way to 25.44 and even 25.07. At the mark of 25.07, it will be possible to open long positions on the rebound to catch an intraday correction of 30-35 pips. Going long at 25.88 and 25.44 will be relevant only amid a false breakout. Alternatively, if bulls push the price above 26.28 amid weak US statistics, the British currency will advance to 26.65 and even 27.07. In this area, it will be a wise decision to go short on a rebound, counting on a 35.40p move. Good luck and have a nice weekend.